Morning, Steve Freed with the comment after the USDA June supply and demand report. As always, the USDA is expected to show very little changes and not expect to have much of a market reaction. But the market reacted positively after the report is out. Wheat's up 16 cents, corn's up 9 cents, and beans are up 8 cents. As far as the beans are concerned, for U.S. carryout, they raised our crush 25 million bushels, which lowered this year's carryout and next year's carryout. As far as the corn is concerned, they raised exports 75 million bushels for this year. Next year they lowered feed and residual slightly and raised the ethanol slightly. So you've got next year a carryout for corn at 1577, and that's a yield of 174. There was some people that thought they might actually show a little bit better yield because of the crop conditions, and they feel that maybe corn acres are going to be up from their March intentions. As far as globally is concerned, the USDA did raise the Brazil crop 2 million tons to 119. They lowered Argentina 2 to 37. And in corn, they did lower the Brazil corn crop 2 million tons to 85. And they lowered the Russian wheat crop 3.5 million tons to 68.5. So some of those numbers were pretty much in line with expectations. As far as the winter wheat crop is concerned, they kept it around 1198 versus 1192, and the all wheat crop 1827 versus 1821. So to me, there's three things that we have to look at from here on out. Number one, I think we have to look on Friday to see if the U.S. imposed tariffs on China and whether that makes them not buy U.S. beans. Any delay in that could be positive to the bean market. Number two is weather. It's going to be hot this weekend, but rains are supposed to come in early next week and cool things down. There are a handful of weather guys that feel that July is going to be warmer and drier than normal. If it's in the southwest plains, it's not a big deal for corn and beans. If it bubbles up into the western corn belt, it could be a big deal. Last year we made our lows on June 23rd. We rallied corn almost 40 cents between June 23rd and July 11th. I think something similar could happen this year. One way to play it is buying the DEES 18, selling the DEES 19 corn spread. Beans rallied over $1 last year during this time frame. And again, buying the November 18, selling the November 19, you could take advantage of a change in the weather. It's really good right now. In fact, one crop person put out that if you just looked at today's crop ratings and moved them ahead through the rest of the season with no problems, you're looking at a 182 U.S. average corn yield and a 53 average bean yield. And that's much lower prices. So we're sitting here with huge ranges potentially in the grains depending upon the weather. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.